college, I spent time with my older students, and I was calling the market with them, and they watched, the markets pan out to script there too. I mean, they're used to it. I mean, when I used to teach every single day for them, they would see those types of things on a daily chart, the hourly chart, and 15-minute chart, and 5-minute chart. You all have been conditioned to expect that now from these concepts because I've been doing it with you all since last year. In November, all that stuff stops, and you'll have to depend on your own time and energy put into this. But by then, you'll know what you're supposed to be doing. You'll know what to go in and practice your drills with. And I practice still. I know how to do this, but I still practice. I take myself into events like non-farm payroll, and I study where do I think that the liquidity is for this on the CPI number. For some of you young guys or gals that never had that experience yet, you'll have a panic attack. It's just a high level of stress. You may not ever want to submit to it and call it a panic attack. It's just an anxious moment. But if you have racing thoughts and physical symptoms of wanting to pass out or stroke or tingliness up and down your arm or whatever, that's adrenaline. And you're sitting still. The easiest thing to do is just to take a quick walk, burn it off, exercise, do some kind of, physical exertion to burn that stuff off, and constantly tell yourself there is no emergency and everything's fine. And you self-talk yourself down from that, which is the reason why I teach you to self-talk in your journal. Don't invite that negative stuff, because if you bring the negative stuff in there, what you're doing is you're saying, I'm pursuing right. And right is not the goal here. Consistently profitable. And if you're only framing that in the context of right only, you're going to take trades that are going to be outside the parameters that your model is, because you're thinking, this is one of those times where it's going to move and it's outside the kill zone, and I got time. I just think it's going to go up there, and we just get in there and push the button. And you know damn well doing it, you're doing everything wrong. So you're not going to be in there low stress. You're going to have a panic attack worrying about it. And you're not even going to trade it right. You're going to submit to the first 20 seconds of it, and you're going to be counting every minor fluctuation that goes against you, thinking that it's going to be the next tick before it runs 20 handles against you in one straight shot. Boom, you're stopped out. Not just a little bit stopped out. You're way stopped out. That's what your mind does to you. It tricks you. And if you trade like that, it's because you're over leveraging, too much risk, or you're trading outside your model, and you know it. And subconsciously, your analyst in you is saying you're doing things wrong, and retail Rick's driving. You've put the analyst in the back seat or left him at home, and you're shotgun with retail Rick, and he's had too much to drink. It's not going to be a good outcome. So your conscious will talk to you. And as you get more experience, as you get better at this, and you have more wisdom because you've been doing it longer, that voice will be a lot more comforting, and it'll guide you. And that's the thing that when you're asking me as students, how do you trust and how do you know that the market was going to reverse like that? How do you know that it's not going to go past that low? It's experience. The analyst is in me saying, these are those instances where it does this. You've seen this before. So here's what we do. This is what we don't do. This is what we expect to see. That is what? Predicting. It's not reacting. It's predicting. The trader anticipates. The analyst predicts. The gambler sits in the back seat and shuts the fuck up. We don't want to listen to the gambler. We're not giving the wheel to the gambler, but they're always going to be chatting. Yeah, but we could have bought more. You should have held longer. This one did better than that one. You bought the wrong pair. Shut the fuck up, Rick. It's hard to filter that out. The part of you that is always going to look for what you didn't do right. Because Retail Rick is constantly looking through the lens of right. You should not have that in your trading at all. But you're going to have it as an internal wrestling match always. Because you're going to criticize yourself. And there's never going to be a bigger critical person on this planet than you are. Nobody could troll ICT harder than I troll myself. When I don't do what I'm supposed to do, I live that shit for years. Maybe it's not that way for you, but it's human nature for us to be judgmental with ourselves. And sometimes with mental illnesses, it can manifest itself in very toxic ways, either inwardly or outwardly. So it's important that you constantly be reminded that we're not pursuing being right, okay? It really is impactful when you go into your trading day, giving yourself permission to not be perfect. If you're wrong, it doesn't mean that it's a failure. It just means you're wrong. And you can be wrong and make money. That's what a sound model does. How can you be wrong? How can you be wrong and make money? Partials. They work every fucking time. There has never been a partial that was taken in a trade